Hello, everybody, and welcome to the last few days of the first half of 2022. July 1 coming on Friday, and then you've got another 3-day weekend with 4th of July coming up there next week. So, advance congratulations on your plans on what you plan on doing for that 3-day weekend. I'm not going to take up too much of your time because all we're doing here is going over what I was already pounding the table on. And for all of those that decided not to take my advice or any suggestions or use me the way it's supposed to be used and message me in the chat room and didn't catch this 7.6% rally that we called more than a week ago on the FOMC day, I wish you the best of luck in pulling your head out of your ass. You got 3-day weekend last week, 3-day weekend coming up. You'll have plenty of time to do it. There's enough frauds out there on FinTwit, Twitternomics, that are out here calling for shit that have no fucking idea what they're talking about because they weren't even in the country when the last bear market took place, let alone even old enough to have even been able to understand what was going on because they were still in fucking grade school. And they're out here telling you what's going to come here because of, oh, the big boogeyman, inflation. We've gone over this time and time again. Inflation is one thing only. It's oil. Oil has been on that rally since COVID lows, which was the end of that cycle. This cycle, we've already projected, we've already thrown out our charts, we've already thrown everything at this to give you an idea and how we're here in summer that this isn't going to end anytime soon. You're going to go until you get all the way up until Labor Day in September when oil prices are going to be high. You're going to have to deal with it. That's the way that it is. That's the way that it's always been. So let's go into this because next weekend, you're really going to want to sit down and listen to what I got to say because it is some scary, scary shit. So, anyway, here we are in June. We are still down 5.74% for the month of June. We ended month of May with that doji candle plus 0.04% in the month of May. We are down 5.74% for the month of June. In order for this to be a green month or an additional doji, we would need to take out 41, 49, 78 this week by Thursday. And I seriously have I got some big problems with that being able to happen. But in any case, you know what it is. We're going to stick with the charts because that's what we always stick with. The VIX was the one I was pointing out last week. Last week alone, we only moved 198 points, high to low. 39, 13, 65. End of the day there on Friday, like I was showing previous Fridays, the final Fridays of the month, how they've been the rallies. That's what you got. We ended out of bear market above that 20% line, 38.54. Year to date, again, above bear market, but we're still very, very cautious about what's going on here to the upside, even though that's exactly what we were talking about there. So anyway, going to go over here to the charts really, really quick. Here you are with the SPX Weekly. SPX Weekly, it's not the chart that I was hoping you would see because it's got a little bit of a default to it, but in any case, you get an idea as to what we've got here. You got your MACD rolling over. We had this very, very extremely oversold weekly candle, almost as oversold as we were over here on COVID. You've got a little bit of a buy divergence. A weekly is not a 1 minute. A weekly is not a 5 minute. A weekly is something to look at with a 3 to 6 month or longer view in a position place, not something that you're looking at in a day trade or a scalp. On to the daily, this does have all the views that I wanted to have with the RSI and the money flows. As I showed last week, as we were going into that bottom, We had a buy divergence on the daily. We finally placed that low down there, which took out Joe Biden's complete run since he was named president, right down there to the penny. Dipped down below 36.45.90. Money flow oversold. Money flow, chalk in money flow oversold. Boom, you got your big influx. Boom, there you are. Here's your RSI. Boom, coming up very close to being overbought on the all-time on the RSI. And as you can look through your RSIs going all the way back to where we were in December, November, here in January and December, getting up here just to that 70 level on the RSI 5 on the daily is a warning in and of itself. And here we are at 67. Already reached everything that we wanted to take place on this initial wave, and I'll show you as we go through that. But again, going back to where we were on the FOMC day more than a week ago, we were looking for a bounce, a crash, and a rally. What we got was the bounce, the crash, and the rally. I alerted out there the June 29th 420 call sweeps. Not a lot of money out there, but the time, the place on the chart, everything fit. $1.15. Great place to get started. Here we got our crash on that Thursday. Crash in progress, rally pending, boom, 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 all the way down to where we needed to go. And then on Friday, boom, here we are. Now we rally. Rally, using the words rally. And we've gone up 7.62% in the course of 4.5 trading sessions. Throughout that alert as well, the $200 challenge, the July 29 SPY 420 call update, they're down at 50 cents. That was on last week, Friday, when we hit that bottom. They're down at 50 cents. I apologize that they closed at $1.72 on Friday. They're only up more than 200% from that. They're up only 60 cents or around 50% from the initial alert. Quitters never win. And here we are going back to last week as what we were looking at, blah, 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 3 red weeks. You go through the email, you're going to get all that you need. Then you're going to have the chat room or the email that you already have because you received the email that if you're not going to use the chat the way that it's supposed to be used, where you have direct contact with me, you can email me with any questions or queries or any trades that you're looking at, and I will immediately respond to it and give you my idea and my opinion as to what I think that the opportunity is for whatever it is you're asking. And I will say, why don't you do a one-on-one call with me and take advantage of it? And we'll discuss it, as well as a few other things that you might be wanting to look at for trading and actually build up a strategy for you. Don't want to? I don't give a fuck. I'm going to go ahead forward with what I'm going in my life because at the end of the day, I'm doing this out of the goodness of my heart to help other people. I don't get a penny of any of the subscription membership fees. It goes directly to the people that need it, people that are not drug addicts, they're not alcoholics, they're just having a hard time with life, trying to get by as good common people. And those are the ones that we help out. Those are the ones that we try and put them in a house, build them a house, give them their own house and lot, put their kids into school, give them clean, fresh running water. So again, it's completely up to you. But what I would suggest while we get off of this right here is please go onto your Twitter, go onto your search and look up My Options Club. Go over here and follow this. I'm not going to delete the 32 trades, but I am going to start shifting everybody from the family that we have at 32 trades over into the club of what we're looking to get launched over here and clean things up a little bit. So I suggest go over here, follow this on Twitter. It's not going to be anything special, but I am throwing out quite a bit of unusual option activity that I'm finding, and the ones that I feel that are appropriate to be used for our chat. I am using those, as you've seen with KWeb, with Sun Energy, SU, and quite a few others in the past. I'm using these as opportunities to get you guys into where the money flow is going that I think fits. So in any case, yeah, you want to go over there, you want to follow that. So onto the charts. Oh, look at this. June 24, SPX 3830 calls, up 1,382%. And I deliberately messaged this to one certain individual who was struggling with going way too big in too short of a time frame and told him, go take one. $500, 50 cents. $5.50 is where it was trading. Go and get one. 81.51 is where it closed. So your $550 goes to $8,150 at the end of the day. Push the buttons. Keep pushing them buttons. So anyway, I am still in a little bit of a rant from last week, having not gone and done the video because there's so much bullshit that's out there on Twitter, on Stock Twits, on Twitternomics, and all of that stuff, and people are out there and they're licking the asshole of this shit rather than just strictly sticking to what's going on with your charts. Because you could go back all the way to December, you can go back to January. We have been 80 to 85% accurate on this entire downward move. And the only with about 90 to 95% reliability on that accuracy. And that's all that you're looking to do because, these guys are out here and they're selling you the sky is falling. They're selling fear. They're selling you umbrellas in the fucking sun because the rain is coming. The rain is coming. All right, enough. 12.94% drop. 2 gap ups. Didn't fill. Very bullish. Made it to our 50% retracement, 39.0719 on that final move at the end of the day to where we dropped from over here at 41.77. Bullish. Still got that gap above here, which is gap number 3, right up here to 40.1781. Looking for that as we go into the end of the month this week. Expecting that to be happening, but again, like I showed you over there on the dailies, we are getting overbought. We're overbought on the 1 hours, we're overbought on the 4 hours, we're overbought on every time frame for the most part, and we need a dip. So just looking at this alone, that 50% retracement, 39.0719, would immediately suggest that you start taking a large amount of short-term risks to the upside off of the table and start eloquently positioning yourself, if you choose to, for that dip that's due to occur. 41.37, 41.98 is where we are expecting that this bounce wave does go for. And then from that 41.37, 41.98, we are hoping that we are going to get the opportunity to go up there and see 42.20, 42.30, somewhere around that 50-day moving average, just slightly above there. And then we're going to have to take a step back and have a really good look at this as to whether or not July, August, and September are going to be absolute just shitbox falls. Because, again, next week we've got inflation reports coming out after the 4th of July. And the CPI for July, rumor on the street from my sources, is it's going to be close to 10%. We get a 10% reading on inflation, the shit's going to hit the fan. So this week, going into a holiday, slow it down. A lot of people go on holidays. They've had the big move here on Friday, repositioning for the second half, repositioning for the end of the quarter. Should be a slow, low volume grind to the upside after we get our dip come in there on Monday and Tuesday with Powell coming on Wednesday. Another view here just to show you where we're at. From the wide view, this is where we are on the bounce. We've made it right to the 138.2 extension over here on this bounce from where I'm charting. We've got those 2 gaps, obviously, like I said, very good. Closing above that 38.79, absolutely fantastic. And where I would expect this dip to come when we get this dip, whether it's Monday or Tuesday, would be to hold that 38.38 level. Anything below that 38.38 level, I would immediately start getting a little bit aggressive on the short term going into the end of the week on some calls back up to this 39.15, 39.50 area. Obviously expecting to see something up here around this 4,000 level. as we go into the first week of July. So that's with this. The VIX I'm showing there in the email, you can see the chart. And again, why when you get the VIX over 30, you start to aggressively start positioning yourself with a little bit of time for something out there, because you are going to get a very aggressive bounce. But this is the one thing that is very concerning to me, and I'm going to show you here, and that's the NASDAQ. Um, no, sorry, my bad. QQQ. Same thing. QQQ NASDAQ. Uh, this is bearish, man. This is not good. This is not good. Um, Essentially for QQQ needs to get back up above 304. After it's back up above 304, it has to stay in the 300s. Any dips that we get out of the 300s on the QQQ is not good, because this is the weakest link of the four indexes right now. Well, the Russell's already collapsed, but the Russell is, the Russell. But talking about the three major indexes, the Dow, the SPX, and the NASDAQ is your legs, and the NASDAQ is very, very, very weak, having Tesla closed 40% from the all-time highs. Amazon just above 40% from the all-time highs. Where Google just above 25% from the all-time highs. Caterpillar 25% from the all-time highs. Booking 30% from the all. Everybody had a massive correction already from individual stocks. Nvidia just below 50% from its all-time highs where it closed, and guys are out there talking about, stocks have to drop 40% from their all-time highs. So they're talking about the indexes themselves dropping 40% from their all-time highs. Man, get the fuck out of here. These guys have no idea how shit works. You get stocks that rotate, and you went through rotations all through 2021, where you had stocks that were getting 15, 20, 25% corrections individually while we were moving upward into the 4800s on the SPX, because we were having such a fantastic trading session where we could get a run up into the beginning of the month, and then we could get a sell off towards the end of the month in the third week, and then start buying that for the next run up. And it was continuous, and it was perfect, and it was fantastic. And now what we're looking at now is we're trading the moons, where when the full moon comes, we're starting to bottom. When the new moon comes, we're starting to top. And the new moon's on June 29th. We got Fed Powell talking on Wednesday with the other three heads, Lagarde and Beale, over from Bank of England. I don't see how they can throw anything else at this that they've already thrown. They threw every recession word and headline and warning they could all during the course of this week. And what we wound up doing was a straight up rally. 20 points there during the course of the week. Where were we for 10 days? Coming off that bottom, 270 to 295. You're in rally mode. And bear rally, bull rally, it doesn't make a difference. We're still looking for that 4170, 4200 level. And then from there, we're going to have to really assess things. But as we've already had that massive run up, it's starting to slow down as to what we've got for the upside, but it's also starting to get a little bit better price advantage for the short term, because you've now got that lower VIX below that 2884. So, over the course of the week, obviously we'll still continue to stay active with alerts individually intraday. The SPX spreads, I'm getting a lot of feedback from people that are absolutely loving this. I'm even getting feedback from people that are not going to buy puts and calls anymore. They're only going to do spreads. Because again, at the end of the day, if you could sit back and make 10% every day, you'd be laughing if you didn't do that. But instead, guys are going to go out there and try and pick and choose how much money they're going to use and try and get 1,000, 500%, 300%. The turtle wins the race, slow and steady. And again, I apologize for taking up too much of your time, but I look forward to helping you guys get to the next level that you want to be. See you guys in the chat room on Monday.